The chaos in the banking system is still going on today as depositors take their money and run. I'm going to show you where the money is going. I'm going to give you all the updates that we've been seeing over the last little while. Since SVB collapsed, what has happened? I've got all the charts to show you there. I'm going to give you some insight as to what's happening underneath all of this smoke and mirrors. Let's begin. You came here for the truth, so let me unveil that for you. Here we have it. First things first, depositors yank another $126 billion from the banking system because they don't care what they say, how it's safe and sound. They want their money out. Total industry deposits fell to $17 trillion. That's down 4.4% from the same week a year ago. And that is a significant amount moving out. You would have movements that occur, but we haven't seen anything like this before. Now, part of where they're putting their money is into money market funds. And you could see that, as it says in the bottom paragraph there, since the beginning of January, investors have poured $508 billion into these funds. And that gives us a look at where the investors want to have their money. They want to put it in somewhere that doesn't necessarily earn anything from it, but that is liquid, that it's available, and that it's not going to go bankrupt tomorrow. So that's what they're doing here. Huge amount moving in and out right now as you look at this in really truly unprecedented levels of market action when I see it the way it's been going. And our friends Janet Yellen and Ben Bernanke and Alan Greenspan and everybody else, all along what they have said was that the Treasury, the Federal Reserve, they can take care of any problems at all, okay? So right now, Yellen is warns the next crisis could come from the shadow banks and regulators must act. What is a shadow bank? Well, think of a shadow bank like anything that's not your bank, your traditional commercial bank. You walk in, you go to the teller, that's a bank. But other people who are playing with money, that could be considered a shadow bank. And in fact, there's a lot of money that moves around in this. In China, the number is much, much larger, but the numbers are also more clouded. So in this case here, of course, what she's saying as the Treasury Secretary, previously head of the Fed, that she says, hey, we got to take care of this. We got to make sure that we do some regulation on these non-banks because they don't have the same level of scrutiny that we do on the traditional banks. That's why the traditional banks are able to be more stable and sound. That's what they say. Now, the problem, of course, is when a depositor doesn't care about what Janet Yellen says or even knows who Janet Yellen is, the money can be taken out regardless. And when the money's taken out, you have a liquidity problem. And that's what we saw with SVB. People didn't care. They pulled the money out, and then you had some big problems with that company, reverberated, and now we're seeing it. The effects of that today. Will they add more regulations? Sure, absolutely. Will it fix any problems? Nope, absolutely not. Okay, and this is the way it goes. There is no middle ground in a banking crisis. It either happens or it doesn't. This means the bond market is either pricing in too many rate cuts or not enough. And that's what we had seen a little while ago with the returns on the bonds suddenly shooting up to over 5% for such short dated bonds. That wasn't something we had seen since 2007. That has come down ever since. Along with that, as it has come down, the banking stress, if you measure it in different ways, banking stress has also declined somewhat because the FDIC and the Treasury and so on have come out and shared what they believe to be something that pacifies the market. And then to finish this segment off, you could see right here, the US economy picked up pace in early 2023, but we expect this revival to be short-lived. We expect the economic momentum to deteriorate in the second half of the year on the back of rapidly tightening credit conditions exacerbated by the banking crisis. That's what we're dealing with right now. There's a lot of tightness and concern. But what has happened since SVB? What has been the result of all this? I'm going to show you the charts, and you could see there's been some winners and there's been some losers. Can you guess which one's which? Well, let me show you that right here and now. So essentially, you can see that line showing SVB. Since then, Bitcoin has been vastly outperforming all the rest. Comparing that to gold, which had risen almost 9% during that period. And you could see, of course, looking along with that, many other things. I've got the S&P 500 got the Dow Jones, NASDAQ, and so on. And it looks like, in this case, the NASDAQ performing extremely well. A lot of investors jump in on the bandwagon once again. But there's something else to that, and it's this. This is the S&P 500 market cap change year to date. You notice those two bars. Well, what does it say? You've got the green one, huge, a lot of money being thrown in recently into the top 15 largest stocks. However, the remaining part of the index is actually down. Do you see what's happened here? People are having this flight to safety. And so more and more finding our way into the biggest stocks, and the smaller stocks are not feeling that love. And it shows us that breadth is something that we've seen in times of turmoil. Now, if we start to see that spread out, that's a healthy sign. If we start to see it narrow even more, that's concerning. Okay, keep that in mind. Here we have it, just showing us over the last little while what has happened to Bitcoin. I mean, crisis after crisis after crisis, and now we are back up to the levels we had seen in the middle of 2022. It's surprising that during this banking crisis, Bitcoin has seen that. I guess they believe it's safer than some of the financial institutions, which is wild. Just thinking even just a few years ago, you never would have heard of that. Comparing the 4 biggest US banks, okay? Then you look at the regional banks, that's the red. You can see how it's been punished. And then the S&P 500. So the S&P 500, nobody cares, right? Overall, because they're investing in these, tech companies largely. The banking index doing okay from its, kind of bottoming out. But the regionals definitely got hit the hardest, okay? And that generally, matches with what we've seen in the, in the news and so on. Anyway, Schwab hit by the worst month since 1987 amid cash sorting woes. They've got some serious problems. Many have said that this is the next Credit Suisse. We will see. First Republic and other bank stocks rise as they want tighter regulations. So that may be the bottoming unless there's yet another bank to fail. And so they want more regulations. That's going to make the markets happy if it doesn't necessarily cause hardship on these companies in terms of their shareholders. Okay, so we'll see what they come up with, and we will get something eventually. Banking chaos creates a once-in-a-decade bond buying opportunity. Buy into the fear. That's what they're saying right now. Who knows, though? Is this really the end? Because the Federal Reserve is going to have to react. And that's a lot of the challenge that we've seen right here, because the Federal Reserve is saying, we're going to stay tough. We're going to stay tough on inflation. Don't worry. But we don't know. We really don't know. So we will see that in this aspect. You're just looking at the Swiss banker admitting helping fund manager evade taxes. I mean, it doesn't surprise me. Whether it's Deutsche Bank, whether it's Credit Suisse, any of these banks, they do this all the time. And it's just once in a while they get caught. That's the true nature of this financial industry. They work together with the government. They're always doing this. Hedge fund made $30 million in days thanks to well-timed bet on Credit Suisse's problems. So this is the type of thing. Some people take a big risk. They could have a big reward. But I'm not so sure that for most people, they can do that same thing. That's it for this one. I hope you appreciated it. We looked at the information that is relevant to you right now today. You can see what has happened, and it all depends right now on the Federal Reserve and their action coming up in days. If you want to know about those activities, you got to subscribe to the channel. I'll give you every detail you need to know. Subscribe. I'll see you tomorrow. Take care.